Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and Metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. And here we are on a Monday, 10 p.m., January 16th, 2023. And we have an update on that Nexo Bulgaria thing. If you remember, last week over 300 Bulgarian agents, cops, etc. raided Nexo's offices. Nexo, predictably, wasn't happy with this and made some disparaging remarks. Well, Bulgaria is speaking up, and they're saying that there's no political aspect to this investigation into Nexo. That's according to a spokesperson for Bulgaria's prosecutor general. Quote, "It has become a national sport to attack the institutions," the spokesperson Sika Maleva said. Last week, the company said that it believed that the large-scale action taken against it, which included a raid on its offices in Sofia and the charging of 4 people with various offenses, they believed that was politically motivated. Nexo said in a statement that the tabloid media and others have falsely linked the crypto firm to political campaigns. Now, it's been linked to 2 parties called We Continue the Change and Democratic Bulgaria. Now, We Continue the Change is a centrist anti-corruption party and the second largest in Bulgaria's parliament. Democratic Bulgaria is an electoral alliance between 3 parties. Now, Bulgaria is in the middle of a political crisis and may have a general election this spring. We Continue the Change has refused to join the coalition with the largest party, reportedly due to accusations of corruption against its leader. Nexo said that members of the team have donated to political parties in a transparent and legal manner. The spokesperson for Bulgaria's prosecutor general said that the company's political donations were not part of the pre-trial proceedings in the case. The investigation relates to crimes such as money laundering, tax offenses, and banking without a license. Nexo has denied these accusations and said that the actions taken so far were wrong. They also allege that the investigators were not competent. In a statement, the company said that they do not offer their services in Bulgaria because of the possibility of facing similar accusations due to corrupt authorities. They also said that the extent to which this action has been taken exceeded their expectations. Meanwhile, Nexo's got beef with another country, because in that very same week, Nexo filed lawsuit in the Cayman Islands against the Cayman Islands Monetary Authority. They're asking the court to overturn the financial regulator's decision to deny Nexo registration as a virtual asset service provider. Nexo applied to the Cayman Islands Monetary Authority, or CIMA, in January of 2021. Since then, CIMA asked for more information in October of 2022 and then later rejected the application in December of last year. Now, Nexo claims that CIMA did not give clear and detailed reasons for this rejection and that the authority broke its duty to provide such explanations. So they're claiming that CIMA placed too much weight on enforcement actions against the company. They cited incidents in the UK courts, and state-level regulators in the United States filed cease and desist orders against Nexo in 2022. Now, Nexo stated that they cooperated with all regulatory inquiries, but announced in December that they're planning to gradually stop operations in the United States due to a lack of regulatory clarity. Meanwhile, Binance and Huobi worked together to stop hackers from using stolen Bitcoin. Now, Binance found out that hackers from the Harmony Bridge exploit were using Huobi to launder the stolen money. Binance contacted Huobi and helped them freeze the stolen Bitcoin and recover it. The exchanges got back 121 Bitcoin, which was worth about $2.5 million. Now, before Binance and Huobi stopped the hackers, someone noticed that the hackers were moving 41,000 Ethereum, which was worth about $64 million. The hackers put the stolen assets in 3 different crypto exchanges after they moved the funds, but it was not mentioned which exchanges were used. On June 24, 2022, the Harmony team found out about the hack and reported that $100 million was stolen. This hack showed that there were problems with Horizon Bridge's multi-sig wallets that people had already talked about. On June 30th, it was discovered that the Lazarus Group, which is a North Korean hacking group, they were probably behind the $100 million hack. A company that studies blockchain found that the way the hack was done was similar to other hacks that the Lazarus Group has used. This is one of the biggest hacks of last year. Now, people think the Lazarus Group got employee log information to get into Harmony's system. Then they used programs to move the stolen assets. Meanwhile, CBDC alert, because central banks around the world are continuing to develop digital assets. We watched as China recently started using its own digital currency in some cities, including the Winter Olympics. Then you've got banks like the Bank of England. Now they're thinking about doing the same. And we talked about the fact that Nigeria's digital currency hasn't been getting used much. India has started a test program, and Mexico is planning to release a digital version of its currency. So it's with that as a backdrop that we have Tony Yates. Now, Tony Yates is a former advisor for the Bank of England, and he wrote in the Financial Times that he does not think the central bank digital currencies are a good idea. No, he believes that creating digital currencies is too difficult and risky. He said that many countries already have digital money, so it's not clear why they need to create new digital money. He thinks the reasons for creating CBDCs are suspicious. But while he says that CBDCs are too difficult and too risky to implement, he also believes that they could be used to stop other digital currencies like Bitcoin. Now, it's his opinion that Bitcoin is not a good candidate for money because it doesn't have a steady rate of inflation. He said that it's costly and time-consuming to use for transactions. He also said that most of the use of Bitcoin is for illicit or speculative purposes. Well, we know he's wrong there, because reports show that the use of Bitcoin for illegal activities has decreased over the years and is now less than 1% of all transactions. Now, this is because Bitcoin uses a public ledger that's accessible to anyone. Additionally, the Lightning Network can be used for fast payments, and many other cryptocurrencies and stablecoins are also being developed and used for various purposes. Now, Yates believes that introducing CBDCs is similar to making central bank reserves more widely available. He believes that in a world where the US dollar is the main currency, creating a new global CBDC would not be helpful. The Financial Times article that he wrote shows the main reason for creating a central bank digital currency is to make payments and settlements more efficient. He also explained that it would be very difficult and costly for central banks to create and manage the technology needed for a new payment system. And sticking on the topic, the finance ministers from countries that use the euro released a statement about the digital euro after meeting in Brussels. This statement was released on January 16th, and it's related to a document from the European Central Bank that shows the progress of designing the digital euro. So the Eurogroup says that the Central Bank and the European Commission should update the Eurogroup and EU countries on the digital euro. They said that the digital euro needs to be discussed and decided upon by politicians. The digital euro is still being studied. The Eurogroup says that they're paying attention to certain issues related to digital currency, like its effect on environment, privacy, financial stability, and other related issues. They're also curious about the plans of EU countries that don't use the euro. What are their plans for their own digital currencies? The Eurogroup members said that they're willing to participate in discussions about the digital euro. They also welcomed the plan of the European Commission to propose a law in 2023 that would create the digital euro and set rules for it. It will be subject to approval by the co-legislators. The European Commission plans to propose the new law before the European Central Bank examines the results of the research phase of digital currency in the third quarter of the year. Now, this statement came out just one day after what we were talking about from Yates, after he wrote his article in the Financial Times. But this next story is an even more interesting one, because Iran's central bank is working with Russia on a new cryptocurrency. And this new, quote, token of the Persian Gulf region would be used for foreign trade. So this new stablecoin that's being developed will reportedly be backed by gold. The stablecoin is intended to allow for cross-border transactions instead of using fiat currency. It will be used in a special economic zone in Astrakhan, where Russia has begun accepting Iranian cargo shipments. And while Russia and Iran want to create a stablecoin, it can only happen when digital assets are fully regulated in Russia. The Russian government has promised to start regulating cryptocurrency in 2023. Both countries have banned the use of cryptocurrencies like Bitcoin and stablecoins like Tether for payments, but they're interested in using them for foreign trade. As an example, in August of 2022, Iran's government approved the use of cryptocurrency for imports. This was to help mitigate the impact of international trade sanctions. The country also made its first international import order using $10 million worth of crypto. Now, Russia's central bank, which had previously been against using crypto as a payment method, now allows its use for foreign trade to reduce the impact of sanctions, but it hasn't specified which crypto will be used. The Seoul government has started a project called Metaverse Seoul. It lets people in Seoul access city services in a virtual world. The first phase has been tested and launched. Citizens can use it to communicate, visit places, get official documents, make complaints, and get answers about taxes. The government spent $1.6 million for the first phase of the project, which sounds like a hell of a bargain to me. The next phase will make it more accessible for older people to use, which is a big deal because in 2022, over 17% of South Korea's population was over the age of 65. They're a good test bed for this kind of thing because South Korea has fast internet, and it's already a leader in metaverse and blockchain technology. The city of Busan planned to build a crypto exchange with a company called FTX, but later changed their mind. I think we all know why. And finally, last and certainly least, we have fresh antics from Suzu and Kyle Davies. It appears that the founders of a failed crypto hedge fund called Three Arrows Capital are trying to raise money for a new cryptocurrency exchange. Now, they're working with the CoinFlex co-founders and want to raise $25 million. This new exchange would be called GTX and will focus on claims from bankrupt firms, something they know a little bit about. The exchange will use a legal team to simplify and speed up the process of buying claims and will aim to become the top marketplace for these types of claims. GTX plans to let customers use claims as collateral for trading, which is different from other claim market operators. They also plan to fill the power vacuum left by FTX and expand into regulated markets like the stock market. CoinFlex is a cryptocurrency exchange that halted withdrawals in June. That said, they did resume partial withdrawals the next month. They also sued a user to fill an $84 million hole in their balance sheet and are now restructuring. Three Arrows Capital was forced to shut down on June 27th, soon after its founders went missing. Su and Davies are now believed to be in Indonesia and the UAE, respectively. Su returned to Twitter in November and accused FTX and Digital Currency Group of causing Three Arrows Capital downfall. Su and Davies were asked to respond to legal documents on Twitter on January 5th after they refused to accept them through their lawyers in Singapore, where the company was based. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.